Welcome to today's live technical analysis session. Today is Thursday, and we're looking at the euro against the US dollar. Few key points for today are the S&B, who announced their interest rate decision earlier on today, the ECB's interest rate decision, which is occurring later on today, and the US PPI figure, which is due out during the American session. For the euro, it appears to be remaining in that relatively sideways motion, which we have mentioned since Tuesday, staying between that S1 support level and our one at 1.06 and S1 at 1.0470. You can see that the RSI indicator is currently reading a figure of 40, implying a bearish market sentiment. Yet, you can see that the Bollinger Bands are narrowing, and despite that RSI being at 40, it does showcase a relatively neutral market sentiment, aka a sideways fashion. So we are maintaining that sideways bias. For today, we did mention the ECB. Now, the ECB is widely expected to cut interest rates by 25 basis points. So there are a few certain scenarios that we should mention. One is the manufacturing and services PMI figure, which we said yesterday. They came in lower than expected and remain in contraction territory. So that was the financial release last week. Now, if you ask me, I think the ECB may cut interest rates by 25 basis points, and we may see a more dovish tone emerging in the bank's accompanying statement, in addition to ECB President Lagarde's press conference 30 minutes after the ECB's interest rate decision. Now, depending on the questions that the ECB president receives from journalists, we might see some increased volatility in the euro. Excuse me, looks like we have a couple of things that we should not have open, and that is Teams. Now, we have, as I was saying, we do have the ECB's decision. Lagarde may, if the accompanying statement is perceived as dovish in nature, we might see ECB President Lagarde trying to mitigate those bearish implications on the euro, so she may take a more hawkish stance. But overall, I am expecting a more dovish ECB in general, which could weigh on the common currency. If it breaks below S1, target is S2, then further than that is S3. Breaks above R1, target is R2, and then R3 as is usual. USD JPY currently appearing to be moving in a slightly upwards fashion. Now, it is taking aim for that R1 level, 153.20. Some selling pressure is emerging on the daily candlestick. RSI is at 53, which does imply neutral market sentiment, but it's broken above that S1, which we had placed, which was resistance turned to support. If it breaks above that R1 level, we can maintain a bullish outlook, taking aim for R2 at 155 for 155.35. Now, there are a few issues that we should discuss for the JPY. One is there was a sentiment emerging from policymakers that the bank would be willing to hike interest rates in their next meeting. So some BOJ policymakers hinted towards some media outlets that if the option for a rate hike was on the table, they would vote for it. But yesterday, what was coming out from the media was essentially that the bank may remain on hold. So we are seeing, I'd say, contrasting opinions emerging from the BOJ. But nonetheless, from a technical perspective, we could maintain a relatively bullish outlook as long as it clears that R1 level. Then we have the R2, and then we have R3. For the British pound, let's see, it broke. It didn't close below. It's currently about to close below that S1 level. RSI is at 50. The PPI figure is expected to increase when compared to last month's figure, which could aid the US dollar. So I would be a bit hesitant to say that this is bullish for cable. I would opt once again for a sideways bias. The RSI is still at 50. It hasn't taken aim for that R1 level just yet. And in anticipation of the PPI figure, we could see cable moving in a sideways fashion between S1 and R1 as well. Moving on to the US dollar against the loonie. Now this is a swing high. Would not be surprised to see the pair moving back down to S1. So testing that resistance turn to support level at 1.4088, and then continuing on its ascent. The RSI is at 62. So there are some bullish implications for the pair, but nonetheless, retracement and then potentially continuing higher. So overall, bullish for the CAD, but would expect, and we may see a retracement back down to that S1 level today. Aussie recouping some of those losses. We are still maintaining an overall bearish market sentiment for the pair. Note this R1 level hasn't been broken through, so it hasn't closed below and is now back again as support. So using this as S1, then S2 and S3 becomes S2 and S3 respectively. R2 becomes R1 and so on. So let's change those text labels. For the Aussie, we are noting on a monetary level that RBA Deputy Governor Hauser is speaking during tomorrow's Asian session. So that may be of interest to Aussie traders. This becomes R1. We will be looking at the Swiss franc as well today, based on that interest rate decision that occurred a few hours ago. And this stays as R3. For our bearish outlook to continue, we would require the pair to fail to break above R1, continue validating this downwards moving trend line, and then breaking below that S1 and closing below S1. It is vital that the pair closes below S1 for us to maintain that bearish outlook. So, dollar against the Swiss franc. So we've got R1, R2, and R3. So we already have support and resistance levels. RSI at 57. The bank cut interest rates by 50 basis points. Reuters had it priced in at that had it priced in for a 25 basis point cut, but overall expectations were for a 50 basis point cut. The accompanying statement appears to be dovish in nature, which could allow the US dollar to make some gains against the Swiss franc during today's trading sessions. Now, we're not seeing a significant reaction though for the US dollar against the Swiss franc. So we would still maintain a sideways bias as long as it doesn't break above that R1 level. Bollinger bands have narrowed between S1 and R1, further supporting our sideways hypothesis. In the event of a break above R1, however, we would opt immediately for a bullish outlook, with the next target for the bulls potentially being that R2 level at 0.9050. Crude oil moving still in that sideways moving channel that we have placed for the past 2 weeks or so. Few reports coming out is that there may be some supply chain issues from OPEC Plus. Haven't actually read that statement, so it is something I do need to check up on once we're done today. But overall, if we move down to the 4-hour time frame, I think we're seeing an upwards fashion in crude oil's price. So WTI cash, RSI is at 70. So at least from a 4-hour perspective, it does appear to be bullish in nature. Daily chart is still at 55. We still have that sideways moving channel. So if you're looking at a daily, it is relatively sideways. Would not be surprised to see the commodity taking aim for that R1 level of 72.10. For gold, it's broken above that R1 level of 2,685. So we are opting for a bullish outlook for gold's price. RSI is at 60, implying a bullish market sentiment. This becomes S1. But we do need to readjust the other levels as well. 2,620 for that S2. And now we need to change. We need to change that S2 level. So that's S2. We're going for S3 at 2,535. Adjusting S1 for 2,685. And then we need resistance levels. I actually need to add the text label up here as well. Say USD. For resistance. So we've placed resistance at that all-time high figure of 2,790, but we do need an intermediate resistance level. And unfortunately, the way this is going to be is it's going to be very close to R2, but we don't really have a choice. Candle wick 1 2 touched currently 2,725 as R1. So that is today's high. We are on the daily time frame. And then we could readjust R3, bring that lower. $2,850. So we have R1, R2, and R3. Opting for a bullish outlook for the precious metals price. RSI supports that theory as well. It is at 60. Needs to move towards that all-time high figure, however, for a bullish outlook to continue. Intel moving lower, taking aim for that S1, which we pointed out yesterday, $18.90 per share would be the next potential target for the bears. The RSI is at 30, further supporting the case for a bearish market sentiment. Microsoft moving higher and higher. We did say it was taking aim for $453.40 per share. And let's see what we can do with the technicals. Support, all time. That would be one. And then broke above, came back down, found support 418, and then the sold low. I'll ignore this and I'll take this as a more significant support level, given the distance between the resistance lines as well. I want to keep it equidistant as well. So 401. OBV currently tends to support the primary direction of the company stock price. Increase in volume. Nice. RSI is at 68. Bullish overall for Microsoft. And now, question is, why is my resistance line up there? Now it makes sense. So it's about $10 in difference. 475. Too close. 480, big figures. Psychology, like it's purely a hypothetical resistance line. So unless we see the price action reacting to that, then It's just a place marker currently. 480. 453.4 is R1. R2 we can have at 468. For support, touch, second, and the third. Readjusting that as one level, slightly higher, a bit more valid. You can see with historical data, acted more as a support and resistance level, which means we also need to bring RS2 high, too far away, touch, touch, and another. 427 as 427.5 as R S2. For S3, that also means we bring this higher, that low. Yeah, we'll take that. 411.10 for RS3. Crossover, that's bullish. RSI is bullish. OBV is bullish as well. Let's add Ichimoku. Why not? Let's do something new today. Let's see. Let's see. Ichimoku. Ichimoku Kinko Hayo. Senkan Senku span P. Red, blue. As span. Let's move the Bollinger Bands. Let's make this more visible because I can see that you can't see anything now. Is this better? Right, so lagging span 1 and lagging span 2, that is the formation of the cloud. This in itself is bullish. We have the conversion line and the baseline. So when there is a strong bull market, the line in red may act as a support level. That is the conversion line. The baseline also in itself may act as a support level in an upwards moving scenario. That is the line in purple is called lagging span. So that's from behind. So if it is above the price action, it is bullish. If it is below, it is bearish in nature. We did have a crossover between the red and blue line, which is quite difficult to see on your screens, but that is bullish in itself. So all indicators are essentially implying a bullish outlook for the company's stock price. So and thus and such, we also opt for a bullish outlook for Microsoft's stock price. From a technical basis, it would require a break above R1 or a testing of R1, a retracement back down to S1, and then continuing on its ascent. But overall, it does appear to be overall bullish for Microsoft's stock price. Nvidia actually using that R1 as a holder. Bullish, wouldn't say so. It's at the mid range of the Bollinger Bands. The RSI is at 47. It did break above R1, but still not enough for a predominantly bullish outlook. Now, we could use this as a support level, but I wouldn't be very convinced. I think this is mostly a retracement, but time will tell. Now, as we do near January 20th, which is inauguration date for uh, President-elect Trump, we want to see more about the potential tariffs and if they're actually going to be imposed, or if it's simply a negotiation tactic by the president. Tariffs on China, tit for tat retaliations are bad for Nvidia, bad for US equities as well, but that remains to be seen. So we can have this as R1, and then this becomes R2. Let's add this text label. ExxonMobil recovering nicely just above that S1 level of 138.70. Looks a bit similar to Nvidia. That is because it is Nvidia. Apologies. Thought I clicked on ExxonMobil. Apparently, I did not. So this is ExxonMobil's chart, which we had placed together yesterday. We have R1, R2, and R3, and then we have the corresponding support levels. As you can see on your screens, it is a bit small, but we do have the text labels here as well. That is R1, that is S1. Now, I would point you towards this particular candle, so this daily candlestick. It wicked through, but the body remains above S1. So this is a valid support level. But if you consider the RSI indicator below our chart, which currently registers a figure of 30, it does imply a bearish market sentiment. Now, there was an announcement from ExxonMobil in terms of their capex spending expected to increase, buybacks as well, increase in production next year. I wouldn't be predominantly bearish for ExxonMobil stock price for 2025. But from a technical basis, it does appear to be moving in a downwards fashion. If it closes below S1, the next target could potentially be S2 at $107.60 per share. So we would opt for a bearish outlook from a technical basis. But note, if it does decide to retrace higher to seek liquidity, it could reach up to R1. That is A, because it's our resistance level, and two, because the Bollinger Bands, the mid range, is closing in on that R1. So we could see a retracement, but that remains to be seen. For now, we will opt for a bearish outlook as long as it closes below S1. Uh, Tesla continues moving higher. Looks like nothing can stop the company's stock price. Good for Elon, probably happy. McDonald's breaking below S1, about to break below 50, slightly bearish. LVMH, bit of a retracement. Looking good for the company stock price. Now, we were discussing LVMH for quite some time. Essentially, issues in China, reduced spending on luxury goods has weighed on the company stock price. Now, the announcement and the implications of allowing the CNY to depreciate could increase spending, well, could increase demand for Chinese goods, which in turn could increase economic growth and thus could generate more money for companies and by association, their investors and those owners and the people who are paid high. It's a bit of an issue for LVMH. bullish from a technical perspective, but fundamentally, something still doesn't sit right with LVMH. Lockheed Martin are moving in a downwards fashion. Eesh. Ouch. Volkswagen about to break above that old S3 level which we had placed. Essentially, look at the support levels and flip them over as resistance. 86, 89, 50, 92, 30. Not bad for Airbus. Google, oof. Wow, nice. Uh, we are bullish for Google. RSI is above 70. It's cleared all the other barriers. At some point, we might see a bit of a retracement, so people exiting long positions, taking some of those profits, pushing the price lower, potentially to 91.05, and then continuing in its descent. But overall, Google is bullish. There is a bit of an issue with some of the advertisers in the Eurozone, but still, this is very, very bullish for Google. Now, there is a gap, which means at some point this may be filled. When that might occur, I do not know, but still, crazy. Wow, nice. So we are bullish for Google. Deutsche Bank, same story. JP Morgan consolidating. Now, what I do find interesting is Dow, the Dow, the Nasdaq, and the S&P. Right. So there is this theory that the Dow leads, the S&P follows, and at the end of the day, the Nasdaq comes in third. So if the Dow is moving lower, one might expect the S&P to move lower, and then the Nasdaq as well. We are on a daily chart for the Dow Jones 30. It's about to reach the figure of 50 on RSI. That 44,050 is support now. But if it breaks below and continues moving lower, I would not be surprised to see the S&P 500 following suit, which is very interesting because if you look at the S&P, it's as if it's found support at 6,050, which we placed together on the prior live analysis session, and might be moving higher. Size at 16, it points towards a bullish outlook, which is very concerning when you look at the Dow. The Dow looks like it's moving in a downwards fashion. And if you look at the Nasdaq, that's also bullish. So I would monitor the Dow Jones 30 and then I would wait for a pullback from the S&P and then after that that could be the Nasdaq. So it is a bit of a concern that there is this much of a divergence between the Dow Jones 30, the S&P and the Nasdaq. So it's something to look out for. Boeing finally moving higher, cleared this high, bullish, but still, your airplanes, I would be concerned about the production. Uh, we did say yesterday that the Eurostox 50 was bound to have a reversal, and we have seen it now bouncing off that old R3, which is support at 4,945. Not bad for the Eurostox 50, but still a concern. Let's see if Emmanuel Macron names the new prime minister today or tomorrow. And then let's see what ensues. Still worried about the Eurozone. If the ECB cuts could aid the Eurostox 50, let's see. I would be very interested to see ECB President Lagarde's press conference later on today. And with that, we are done for today. Thank you for tuning in. I wish you all the best, and I will see all of you in the next live technical analysis session that we will have together, which will be in 2 weeks' time. Next week, our senior market analyst will be taking over, and that's who you will be seeing. Thanks for tuning in, and I'll see you all next time.
Okay, let's go ahead and get started. So, as per usual, a risk warning and disclaimer. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. Redistribution of the material is strictly prohibited. So I'm Melanie, and I'll be your speaker for today. I'm an investment analyst from Everest Fortune Group, who were finalists for Best FX and Equity Research in the years 2019 to 2021. Okay, so here's our agenda for today. We're going to start off with a really quick intro to stochastic oscillators, in case any of you guys haven't used it before. And then we'll talk a little bit about RSI because they are pretty closely related. And then we'll compare the two, followed by some divergence trading. So if you guys are unfamiliar with divergence trading, we'll definitely go through quite a few examples in this webinar. And if we have time at the end, I will take some requests as well for any charts that you'd like me to go through. Yeah. So let's go ahead and get started. Wait, let me just make sure you guys can see me. Okay. So how exactly do you use your stochastic oscillator? So wait just a second. Okay. So what exactly it is, firstly, is that it consists of two lines that fluctuate between 0 and 100. So the first line is called your K line, and it represents the current closing price of the instrument in relation to the high and low prices of a given period. The second line is called the D line, and it's basically the moving average of K over a certain number of periods. So I have a pretty more in-depth explanation of it here on the slide if you are interested in that. So the slow stochastic indicator, which is your D, is a 3-period moving average of K. Difference between the slow and fast stochastic oscillator is the slow K, which incorporates a K slowing period of 3 that controls the internal smoothing of K. So setting the smoothing period to 1 is equivalent to plotting the fast stochastic oscillator. So the fast stochastic oscillator is basically your K line that we mentioned earlier. Okay, so how do you use it exactly is basically for us, we will use the settings that are 533, the readings that are greater than 80 indicate that price is near its high. Readings that are below 20 indicate that prices are near the lows. Okay, so a security is overbought when K moves above your 80 line, and a security is oversold when K moves below 20. So I've included the formula for the stochastic oscillator as well in case you were curious. But most of the time when you're using this indicator on your MT4, MT5 on TradingView, it's normally calculated for you already. So this is just like FYI. Okay, now let's talk a bit about its pretty closely related cousin, which is your RSI. Oh, I also wanted to mention earlier that your stochastic oscillator is a momentum indicator, but it doesn't provide information about the direction of the trend. It's also a lag, means that it relies on past price data, and it might not be so effective in predicting future price movements on its own. So that's why we often will use stochastic oscillators with other indicators or Fibonacci levels and so on and so forth. Okay, about RSI, because these two we normally will use them together. So what is RSI? It's basically a measure is to measure the strength of the price action over a specified period of time. Commonly used to identify potential entry and exit points in the market. Your RSI also measures the magnitude of a security's recent price changes to determine whether it's overbought or oversold. Okay, so how do we use that? So it basically oscillates between 0 and 100 with values above 70 considered overbought and values below 30 considered oversold. So when the RSI value is above 70, it suggests that the security might be overvalued and due for a price correction, potentially indicating a sell signal. When the RSI value is below 30, it suggests that the security may be undervalued and due for a price rebound, potentially indicating a buy signal. Okay, so people use RSI in combination with other technical analysis indicators or your fundamental analysis as well. So that's why we want to talk about both RSI and stochastic together. Okay, so let's compare the two. So they are both price momentum oscillators that are widely used in technical analysis. And while they're often used in tandem, they each have different underlying theories and methods. So the stochastic oscillator is predicated on the assumption that closing prices should move in the same direction as the current trend. Meanwhile, the RSI tracks overbought and oversold levels by measuring the velocity of price movements. So in other words, the RSI was designed to measure the speed of price movements, while the stochastic oscillator formula works best in consistent trading markets. So yeah, so we would generally use your RSI in trending markets stochastic more so in sideways or range-bound markets. Okay, so this is just an example of what your RSI and stochastic looks like. This is on TradingView. You can see it's pretty similar in terms of the price movement. So whenever we are expecting prices to drop, they tend to have a pretty similar price movement and price structure as well. Okay, now let's get into one of the biggest strategies that we use for stochastic and RSI, and that is divergence. So divergence in trading is basically a technical analysis concept that compares the movement of a security's price and an indicator, such as an oscillator that we're talking about here, to identify potential trend changes. So there are two types of divergence, your bullish and your bearish divergence. So I have some examples here of bearish and bullish divergences. There are regular, hidden, and exaggerated divergences, but let's firstly focus on our regular divergence. So your bullish divergence occurs when the security's price makes a lower low, while the indicator makes a higher low. So this suggests that the downward momentum of the security is losing strength and a potential upward trend may emerge. Bearish divergence, on the other hand, occurs when the security's price makes a higher high. So this suggests that the upward momentum of the security is losing strength and a potential downward trend may emerge. So it's important to note that divergence is a potential early warning sign of a trend change, but that's still not a guarantee. Okay, so that's why we would use this in combination with your trend lines or chart patterns to confirm a divergent signal before making trading decisions. Okay, so you can see the higher high that we're talking about for bearish and the lower high, lower low, higher low on our bullish. Okay, so now let's take a look at some examples. I think we have a bunch of examples to go through. Yep, so if you guys have any questions, feel free to just pop them into the chat. Okay, so first example, we have price testing a key horizontal resistance level with price making a smaller high, resulting in bearish divergence with the RSI. On our RSI, you can see a descending resistance line forming, and it caught the past two reversals correctly. So it forecasts that we could be seeing a reversal here. Okay, and the bearish divergence, you can see a higher high and a lower low here. A lower high, sorry, on our RSI. So you can see after that, that price reversed strongly because of three factors. Firstly, the horizontal resistance, the RSI resistance, and lastly, the bearish divergence. Okay, and that similar thing happened on RSI as well, where RSI reversed very strongly off of the resistance, the descending resistance on our RSI. Okay, and now another example here. This one's pretty straightforward. When price is making a higher high and stochastic is making a lower high, that is a bearish divergence. So pretty straightforward, and we are expecting prices to react off of that same area, which it did here. Okay, and it's also giving us a repeated pattern with our bearish divergence again, with price making a higher high, and stochastic giving us a lower high. There is also a hidden resistance level here. So you can see on our stochastic, these two peaks line up in this horizontal dotted line. Whereas on our price, you can see very clearly that price moved upwards, basically. So you can see price reversed very strongly after that bearish divergence. Yeah, and also after the hidden resistance. Okay, so this is the levels, or rather the areas that we're looking at. Here you see price making a higher high, stochastic kind of maintaining at this level both of these times, and that's basically called a hidden resistance. So hidden resistance is when our stochastic or RSI or whatever oscillator indicator you're using, basically at the peaks line up to give you a horizontal resistance level, whereas on our price, you can see very clearly that the peaks don't line up. Okay, I think that's pretty straightforward. So let's look at another example. Here we can see that prices are moving in an ascending trend line, whereas on our stochastic, it's maintaining at this hidden support level. Okay, we have a stop loss here, your entry over here at this overlap level, and we're going in for a buy towards our take profit at this swing high here. Okay, so ultimately, this is the result of that, where we are expecting price to bounce off of the ascending trend line. So firstly, we have the ascending trend line. Secondly, we have the hidden resistance. Yeah. Okay, and that's exactly what happened here. Bounced off nicely and headed upwards towards our take profit. Okay. Okay. Now let's take a look at divergence potential. So in this example, we have an overlap level. Okay, overlap level is basically when there are swing highs, as you can see here, and a swing low that line up in that same area. And it just means that the bulls and bears respect that area. Okay, so we want to take note of where the bearish divergence started. So as this is the level that it will tend to reverse to. So you can see it started here, and our RSI is making a lower high, whereas on price is making a higher high. So we have a bearish divergence, price is making, yeah, that's basically what I just said. And we are expecting price to rebound to that same level, also because of that overlap level that I mentioned earlier. So we have two factors now coming to play, your bearish divergence and your overlap level. Okay, and you can see that's exactly what happened. Price reversed nicely back down to where the divergence started to occur. Okay, so that's why we always say not to use any one specific method or one specific method like your divergences that we've been going through, or one specific indicator like your RSIs. That's why we always use a combination of them, like your graphical methods, which is what I just mentioned about the overlap levels or pullback levels, swing highs, swing lows. Those are graphical, or your Fibonacci levels as well. And use those in combination with your divergence potentials, hidden resistances, and indicators, just so that it confirms your signal before you go in for the trade. Okay, and forecasting breakouts. So you can also use divergences to forecast your breakouts. And one way of doing that is by using your RSI or stochastic indicators. So firstly, in this example, we see that the RSI broke out of this ascending support, highlighted by this dotted line. So it broke out of it, even though on our price chart, it's giving us, it's showing that price is continuing in that same, I guess, ascending trend line. Okay, so that's the first point. Second point is that price is barely breaking out of the ascending support line. If you look really closely, you can see it kind of just peeking out below it. But it shows a strong recent bearish divergence versus RSI. So you see price making a higher high, whereas on our RSI, it's making a lower high. So that's your bearish divergence. So we have 3 points now, the RSI breakout over here. Secondly, we have a bearish divergence. And lastly, we have price just breaking out a little bit. So it suggests that there is a high probability that price is going to break out of this ascending trend line. You can see after that, that price broke and dropped strongly. Okay, so just as we expected, price right after this bearish divergence, price broke out of it and dropped strongly from this trend line. Okay, any questions so far? Okay, if not, let's look at another. We still have a few more examples to go through. Before, if I still have time at the end, I will do a little bit of live analysis for you guys. Okay, so next we are looking at this RSI breakout again. What's the best time frame to use divergence? So, actually for divergence, we normally would use on a mid-range kind of time frame, so like your 1 hour, 4 hours, or even your daily time frame, just so that there's more time for you to see, kind of how the price plays out. Yeah, and also because on the shorter time frames, like your 5 minute, 15 minute, and 30 minutes as well, that kind of it's a bit it tends to have a little bit too much noise for you to actually see the divergences, because price is constantly moving. Yeah, so to answer your question, one H1, H4, and a daily time frame. Probably wouldn't go more than daily time frame. Yeah, no worries. So what was I saying? Yeah, so on our RSI here, we see RSI breaking out of the descending resistance, and we're calling it a resistance instead of a descending trend line because for it to identify as a trend line, it needs to touch at least 3 times, which here you can see it hasn't. So that's why we're calling it a resistance level. So now price is now testing this descending resistance line, and we're wondering if it's going to break out of it. Okay, so that's our first point. Excuse me. Our second point is that there is a descending line breakout of our RSI. Excuse me. And lastly, there is a recent bullish divergence, which suggests that we could be seeing a strong reversal. So over here, we have price making a lower low and RSI giving us a higher low. So that is a sign that a bullish divergence, or rather that is a bullish divergence, and it could be a sign that we're seeing a strong reversal. Okay, so you can see after that there is a successful breakout of the descending resistance line as forecasted by our RSI. Okay, here is kind of a GIF for you to visualize what we are talking about by bullish divergence. So in this bullish divergence, we are using RSI as our indicator. You can see price making a lower low, and our RSI making a higher low, which is a bullish divergence. That in combination with um, our resistance level here. That's also in line with a swing high and also a 100% Fibonacci projection. Okay. Yeah. So as you can see in the GIF, continued um price actually broke out of that descending trend channel and it reversed off of that resistance line. Okay. Okay. Another example for bullish divergence. Here's a little bit smaller. You can see price making a lower low, RSI making a higher low. Another point is that RSI is actually moving um, below 30, okay, which is, as you if you remember earlier, that is a sign that price is oversold. So it could be a sign that price is going to rise again. So you can see after this bullish divergence, price did continue to rise. Okay. Yeah, that brings us to the end of my slides. Um, Let me just pull up my trading view and we can take a look at some charts and see if we can identify any divergences. Okay, do you guys have any requests for any charts? Mm, okay, if not, we can go ahead and take a look at um AUD first. Okay, so on our weekly time frame, you can see prices kind of moving in this downtrend. But on our daily time frame, we see prices generally moving upwards. Okay, we also, I think we might have prices moving in a trend channel. Let's see. Okay, not really. Okay, but it is generally moving upwards. Okay, no. Okay, so going in with our support and resistance levels first, I'm gonna place my first resistance up here and my pivot over here. Okay, this is my first support. Now I'm going in with my Fibonacci levels. Okay, my 61.8 lines up. I'm also gonna place okay, actually no. I'm gonna move my pivot here. Okay, because it's a double swing low and also it's in line with our 38.2. Okay, now I'm going in with a Fibonacci extension. Okay, and my 127 lines up with my first resistance. Okay, so for that, we used this Nike tick shape that you see here. Let's see if we have any projections. Okay. Okay, my 78.6 also lines up with this first support. So this area here is our confluence area, which is basically when two or more Fibonacci levels line up nicely. Okay, that's our confluence area. Okay, my 61.8 kind of lines up with my first resistance as well. So for confluence areas and Fibonacci levels, they don't really have to line up exactly at your horizontal levels. As long as it's kind of near it, that's good enough. Reason being that price tends to be attracted to these areas, but it might not be able to pass through them or break out of them rather. Okay, so as long as you kind of get it's kind of around the same area, that's good enough. Okay, now let's look at some indicators. I like to start off by looking at Ichimoku and MACD because it's easier to see at one glance what your signals are. So now Ichimoku, it supports our bullish signal. MACD is not supporting our bullish signal. Okay, on our stochastic, let's see if we have any signals here. Okay, here it's not really telling us much. Let's look at RSI. Okay, on our RSI, we have prices moving in this uptrend. Sorry about that. Okay, sorry about that. So, where were we? Yeah, so we have prices moving in this ascending trend line. Okay, it's not really a trend line like I mentioned earlier because we need three touches on it, but it is a resistance level. So we are expecting prices to continue upwards here. Since previously it also um continued upwards. Okay, it also caught that bounce. Okay, maybe yeah, do you guys have any questions or any charts you'd like me to go through? Hmm, if not, yeah, I guess that's it for today's webinar. Thank you guys so much for joining me. I hope you guys found this session helpful. And if you guys have any questions or anything, feel free to pop them into the chat. I will still stay around for a while more. And yeah, but if not, you guys can go ahead and leave the session, and I'll see you guys again next week. Thanks, everyone. Yep, this session is being recorded. I'm not too sure where they're gonna post the video. So if you want, you can email IronFX. Um, yeah, you can just email them and ask them for the recording because it is currently being recorded. Yeah, just ask them and I'm sure they will help you out. Okay, yeah, thanks everyone. Bye.